March was the best month in my portfolio to date, and I hit a new milestone in the portfolio. It just went over £14,000. I'm going to show you the dividends I received in March, and at the end of the video, I'm going to show you the buys I've made this month and the performance of the portfolio. Let's get into it. We should first take a look at the performance of the major markets. The S&P 500 was up 2.2% in March, continuing on its run, so sentiment still seems to be good. The US markets are still running on momentum from these big tech stocks and mainly Nvidia. And with the Fed keeping interest rates the same, the media and general market saw this as dovish and cemented the idea that there will be at least 3 interest rate cuts in 2024. And this had a small effect on the S&P 500, as you can see here. And this brings us to the FTSE 100 and the Monetary Policy Committee, who also decided to keep interest rates unchanged. The FTSE 100 was up 3.5% in March. You can see that after the Fed meeting on the 20th and the MPC meeting on the 21st, the FTSE 100 went up by 2.5%. The outlook for the stock markets are looking good. So having said that, that's why my portfolio has performed so well in March. If we can expect interest rates to be cut this year by 3 or more times, then I think we can expect the markets to continue going on this run towards the end of 2024 and going into 2025. Let's move on to the dividend income I received this month. The first dividend was from SSE on the 8th of March. SSE is an energy company here in the UK, and so you can expect the stock price to be very cyclical. Looking at the stock chart, you can see that very clearly. The ups and downs throughout the year, and you can see that we are currently in a dip. But I can expect that their stock performance is also connected to interest rates, as they carry a lot of debt, and they use a lot of debt to expand their business, especially in the renewables sector. They pay a decent dividend. The yield is currently sitting at 5.3%, and they pay this dividend twice a year. I received £7.40 from the 48 shares I own in SSE. Microsoft was my next dividend payment. Microsoft pay a very small dividend at 0.7%, but the growth in the company is the main selling point. Tech stocks have been the highlight of the global stock market over the last 12 months. Microsoft was up 60% in 2023 and is already up 13% in 2024. In my final portfolio update in 2023, I predicted that tech stocks wouldn't continue on this run into 2024, but I think I was a bit wrong. What we've seen with Nvidia and AI has shown that we're not at the end of the tech bull run. And if the Fed cuts rates this year, we could continue to see high growth and the rest of the stock market might actually follow. Microsoft paid me £2.03 on the 14th of March. The dividend I received on the 15th was from Realty Income. This is a monthly dividend payer, so we'll be seeing this every month. Realty Income is an American real estate investment trust that invests in commercial real estate and has tenants such as B&Q and Tesco here in the UK and some other big names in the US. The price is currently sitting at $54. The stock has recently seen some alleviated pressure since the Fed meeting. As I said, the consensus is that rate cuts will begin soon and there should be at least 3 this year. So this is positive for companies like Realty Income that are built on debt. I've invested around £2,000 into Realty Income and I'm currently down £150. It's my biggest position in the portfolio by far, sitting at around 14%, as I've continued to add to the position. I added £400 just in February, but in March I haven't added anything. The current dividend yield is about 6%, and with my 43.3 shares in Realty Income, I received £7.41 this month. My next dividend was from Unilever on the 22nd. Unilever is a British consumer goods company that owns brands such as Dove, Domestos and Ben & Jerry's. Unilever is up 4% this year. I think cost pressures had an effect on the company's outlook throughout 2023, but I don't think this will affect them long term. It's mainly investor sentiment, and I think 2023 provided a great opportunity to buy into Unilever or to increase your position. I added heavily into the position in December and January, as I believe the price was too low not to buy. It's about 8% of my portfolio, and last year I increased my holding from about 5% in June up to 8% towards the end of the year. And I think I'll keep Unilever as a core position of the portfolio. The dividend yield is currently about 4%, and with the 27 shares I hold, I was paid £9.84 from Unilever. The last dividend I received was on the 27th of March from my shares in VWRL. VWRL is the Vanguard All-World ETF. I've been buying 1 or 2 shares of this ETF every single month. I hope to make this a core position of the portfolio in the future, but for now I'm just pound cost averaging into the position to bring down the risk of the portfolio. My goal is to make VWRL 25% of the portfolio, but currently it's just sitting at 10%. At the ex-dividend date, I held 12 shares, and from those shares, I received £3.61 from VWRL. I received 5 dividends in March, and this is over double what I received in March last year, which makes sense as my portfolio is over double what it was last year. My total dividends for the month of March was £30.29. Now let's take a look at the portfolio in depth. Looking at the investment dashboard in the top right corner, you can see that my total return is 13.57%. My portfolio value is sitting at £14,693, with £1,600 of that in cash and about £13,000 of that is actually invested into stocks. The total dividends I've received in the portfolio portfolio is £291. As you can see, the dividends I've received in this month is £30.29. My actual yield on cost is 2.23%, which is low because I'm continuously adding to the portfolio. My total return is £1,600, and you can see here in this graph that that's made up of about £1,300 of market return, and the remainder is the dividends. My portfolio is made up of about 54% US and 46% UK stocks. It's skewed slightly because VWRL is classified as a UK stock in this spreadsheet, but maybe I'll think about changing that to a different denomination like ETF or world or something like that. This graph shows the breakdown by sector. You can see that most of my portfolio is in tech and consumer defensive. Tech has become such a big part of the portfolio just due to growth, and consumer defensive, I'm just continuously adding to those positions. If we look at this graph here, this shows the position sizing. So realty income, you can see, is 14% of the portfolio. And then my next biggest positions are VWRL at 10% and Microsoft at 10%, GSK at 10%. And then we've got some other smaller positions in there, with my smallest being Aviva at 1%. This graph here shows the wins and losses in the portfolio. So you can see my three biggest are Google, Amazon, and Microsoft. Amazon and Microsoft are both about 60% up, which is quite ridiculous. And then my position in Google is 45% up. And then we've got some other smaller winners here, but you can see these bars here are actually still above the 20% line, and Tesco is just below the 20% line. You can see I have 14 positions in the portfolio. This doesn't really fluctuate much. I do occasionally sell out of positions, but then I usually add back into a new position when I do that. I'm trying to keep the portfolio kind of small and concentrated, but I think in April I'm going to consider recomposition of the portfolio when I consider moving to a new provider like Trading 212. Now if we move over to the dividend dashboard, this gives us an overview of the dividends that I've been receiving every month. You can see in this graph at the top left that my total dividends for my second year of dividend investing is £162.62. I've already overtaken my first year of dividend investing, which is my first 12 months, which is from September 2021 to August 2022. My second year of dividends is from September 22 to now, which is 7 months. This graph here shows my dividends month to month, and you can see that my dividends in March was my biggest month in dividends since September last year. You can see it does fluctuate a lot month to month, but over time they are increasing. Then we have here my portfolio value over time, which you can see is gradually increasing and increasing month by month. So if we look here at my total dividends for 2024, it's £59.64. My total dividends for 2023, which was my first full year of dividends, was £216.46. So considering we're 3 months into 2024, if we just times this by 4, that gives us £240, which is already higher than my total dividends in 2023. But I expect that to continue growing, considering I'm adding to the positions every single month. This pie chart down here shows the dividends I receive per sector. So you can see the sector that pays me the most dividends is consumer defensive, which is currently Pepsi, Tesco, and Unilever. And the sector which pays me the second most dividends is real estate, which is only one company, which is Realty Income. This box here is the live off dividends date. So this takes my current portfolio value, my current portfolio dividends, and then calculates when I'll potentially be able to retire off of dividends. So that's given me June 2058, which is what, like 35 years away, which isn't great, but hopefully my dividend yields will actually increase over time. So this large box here shows my future portfolio and dividends. So I can change some different factors about how I'm investing to then calculate what my portfolio will look like later on in life. So there are 3 factors that you can change. You have price appreciation, you have starting yearly investment, and you have increase in investment yearly. So you can also change the way that the portfolio actually uses these factors. You can keep the increase in investments. You can remove the increase in investments, so you just have a flat investment every single year. You can remove dividends reinvested into the portfolio, and you can remove the cap on the increase in investments. Currently, this uses a £20,000 cap, which is the ISA limit. So currently, I invest £600 a month, which is £7,200 a year. I've added a 10% increase yearly, which is roughly what I want to be doing in my portfolio. It's not exact. And I've added a price appreciation of 4.5%, which is very conservative considering that most markets have about a 7 to 9% increase yearly over time. But 4.5% is usually what appreciation would be if you did the average yearly return minus the average yearly inflation. So if we take these 3 factors, after 30 years, my portfolio value should be 1.5 million. The total invested money would be 526,000. My yearly dividends would be £45,000 per year. And my total dividends received to date would be £457,000. There are other things on the spreadsheet. So I've got the daily dividend calendar. You can see the dividends that I received per day. So you can see that I received them on the 8th, the 14th, the 15th, the 22nd, and the 27th. And you've also got the dividend calendar, which shows you every single month which companies paid you dividends. So you can see this month, Microsoft, Realty Income, SSE, Unilever, and VWRL. And you can see here on this line here, which is realty income, they pay me every single month. And you can see that over time, the dividends have been increasing every single month. Now let's go take a look at my portfolio on the Freetrade app. So you can see here that my portfolio is sitting at £14,670. It does differ slightly from the spreadsheet, and this is mainly due to like Forex rates. I have to manually input the Forex rate onto the investment dashboard, and Freetrade might use a different rate to calculate my investments, but it does have the exact same stock holdings and when I bought them and the dividends received, etc, etc. So you can see my portfolio to date is up £1,500, which is like £500 higher than what it was last month. It's actually ridiculously high. My portfolio has been on a tear in the last month. You can see here on the last month up £538. In the last 3 months up nearly £800. The last 6 months up £1,300, and then just in the last year up £1,400. So my portfolio has performed very well recently. You can see realty income is my biggest position, £1,850. If we quickly go into it, you can see that I'm down £150 just there. And you can see here that they've actually recovered quite well this month, up 3.5%. But if we just go through my positions, second biggest position is Microsoft, £1,350, up 60%. VWRL, the FTSE All World ETF, £1,300, up 10%. GSK, £1,280, up 25%. Pepsi, £1,100, flat at about 0.16%. Unilever, £1,073, up 3%. Google, £900, up 44%. SSE, £790, down 4.7%. Lloyds, £790, up 13.12%. Amazon, £650, up 60%. Tesco, £642, up 18%. Disney, £609, up 16.3%, which is a massive surprise considering how badly that's performed recently. Apple, £525, down 3.67%. Aviva, £119, up 22.69%. So if we quickly take a look at the activity, the dividends I received from SSE, Microsoft, Realty Income, Unilever, VWRL isn't showing on there yet. And then we have my top up on the 1st of March. I bought 1 share of VWRL at the beginning of March, and I bought 1 share of VWRL at the end of March. So I didn't buy many shares in March. So we can actually take a look at the portfolio performance against the major markets. So if we go into insights, we can see here my money weighted rate of return is 28.07%. And then if we have a look at my time weighted rate of return, I'm up 19.3%, which is slightly higher than the Vanguard FTSE All World, which is good, I guess. So that's it. That's my portfolio. So those of you who watch my channel regularly, you would have seen that I made an update video where I talked about my switch from Freetrade to Trading 212. Now that hasn't happened yet, simply because come April, I'll be able to have 2 different accounts at the same time. I won't actually have to physically change my accounts. There will be a change at some point, but at the moment I'm a bit busy, so I haven't been able to take that time to actually move the portfolio over to Trading 212. But come the 6th of April, I'll probably be running the portfolios side by side. That is the end of the video. If you like the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, then please leave a comment below and I'll give you a reply. And you can check out a really important video about ISAs right here, or you can just check out this video.